Welcome back. We're going to spend a little time discussing the Relative Strength Index together. The RSI measures a financial instrument on a relative scale of 0 to 100. Indications above 70 are considered overbought, while indications below 30 are considered oversold. At times we may use the levels of 80 and 20 to identify extreme market conditions. In a typical RSI fade strategy to the long side, we should wait for the RSI line to cross below and back above the 30 oversold level. At this point we can go long with protective stops placed below the recent lows the market was able to achieve, while the RSI was in fact below 30. In this case we can see the market reached a low as the RSI line dipped below the 30 level, and then once it crossed back above, this generated a trade signal to go long the market with protective stops placed below the recent lows. The opposite holds true to the short side. We should wait for the RSI to cross above and then back below the 70 overbought level. At this point we may sell short with protective stops placed above the recent highs. In this case we can see the market actually achieved a little bit of a higher high before eventually reversing back to the downside. For this reason, it's important to always give our protective stops a bit of extra breathing room to allow for market fluctuation. In our RSI breakout strategy, we should look for the RSI to cross above the 70 level as the market closes at a new significant high. Protective stops should be placed below the recent lows just prior to this breakout. In this case, we can see the market closed at a new high as the RSI did in fact cross above the 70 level. In this case, we may choose to go long with our stops placed below the lows achieved just prior to this breakout. To the downside, we should wait for the RSI line to cross below the 30 level as the market closes at a new significant low. In this case, protective stops should be placed above the recent highs just prior to this breakdown. In this case, we can see the market actually did trade to a new significant low and closed at that low as the RSI crossed below the 30 level. In this case, again, we may sell short with the stops placed above the highs that were achieved just prior to this breakdown. Additional notes: we should apply our breakout strategies during active markets and our fade strategies during quiet markets. Note the currency pair traded, as some pairs tend to trade in a more volatile manner than others, depending on the current market condition. We thank you for joining us, and we hope to see you back real soon inside the 4X Lounge.